Productivity comes down to how efficiently activities are being performed by individuals, departments, or the entire firm. In a service business, time is money, so it's important that it be utilized wisely. Especially for those who may be in a small firm. You might have limited resources to get the same job done. With working remotely, many of us have to shift from seeing productivity to actually measuring it. This also brings in the conversation of accountability. Does your staff know which functions and activities they're accountable for? And are they being handled in a productive manner? We have put together a list of 10 productivity metrics that law firms should track. Some involve tracking individual activities and others focus on results. These can point out any gaps or misuse of resources across various areas. Choosing the metrics that best serve your firm is an important first step. You will then need to decide how best to collect this data, eventually determine a benchmark, and then set future goals for individuals as well as the overall business. Only you can decide which results are acceptable for your firm's success. Our first metric that we'll be covering is a simple one. It's the number of matters opened and closed. If your firm is taking on new business, it's important to know how many new matters are opened during a certain time frame, as your current resources will need to take on those new tasks as well. You should have in mind how much time is needed by how many resources per matter so that you know when it's time to hire more help. Some of the other metrics that we discussed today can help with that as well. Tracking closed matters is important also. One reason is purely for clean record keeping. Are matters actually being closed out and archived properly? Depending on the type of work that you do, an average time from open to close by specific matter type might also be helpful, because then you could see if certain files are being kept open for longer than they should be. Our next item is utilization rates by staff member. Utilization simply refers to how well is a resource's available time being utilized. How much time went towards billable work, non-billable work, or was simply unaccounted for. When it comes to calculating a utilization rate, if the firm is very strict about tracking all hours, you can divide the total billed hours by the hours recorded. Otherwise, you can choose a fixed number, for example, 40 hours for the week, let's say. You then want to divide billed hours by that number. This will essentially let you know the percentage of each resource's time that was billed with the intent of generating income. Acceptable utilization rates can differ based on the resource's role. For instance, a partner would likely have a higher utilization rate than a legal assistant might. This analysis can also point out a surplus or a shortage of resources, as well as poor tracking of time overall. You can also track realization rates by timekeeper or matter owner. Realization is about realizing a return on the time spent. Simply, it's tracking how much of the time spent was billed, but also collected. This can highlight a surplus of discounts, no charge activities, or waived balances, which can directly impact the firm's bottom line. This can also dive even deeper into collection or fee distribution reporting. Looking at how much fee is realized by each timekeeper can infer their overall contribution to the firm, which can then factor into salary or bonuses. Often, you can track these amounts by responsible or originating lawyer, as well as assign percentages for distribution. That reporting can get fairly advanced, but in many firms, this is a great tool for motivating productivity towards billable work. Fee aside, let's now talk about costs. It's important to track the percentage of cost recovery. Invoices to clients include costs as well. It's important for each lawyer to be aware of costs which are paid out by the firm on behalf of their client and ensure that they're billed and hopefully collected for reimbursement. Often firms do not keep tabs on the different phases of cost recovery. You might know that there are costs falling through, but likely you don't know how much. This is one area where income is lost due to poor tracking or just messy internal record keeping. Firms which identify this as an issue may choose to make their timekeepers or billing staff accountable to ensuring these items are billed. Keeping an eye on this metric will highlight any progress. We've been talking a lot about hourly billing. If you do any fixed or flat fee billing, you want to be aware of your fixed fee profitability ratios. Way too often, I hear from those who bill fixed fee or contingency that they don't need to track time. How will you know if the fee you are charging is proportional to the effort being put into it? Inefficiencies are a lot harder to find when you're not keeping an eye on the time invested in fixed fee activities. We recommend tracking non-billable time and assign a value to that time based on who's doing the work so that you can compare the fee billed and earned against that. If the effort is much higher than the fee being charged, you may decide to increase your fee. Or you might choose to rectify the inefficiencies with those activities so that you can reduce the time spent on those cases. Our sixth item is comparing work in process and available client funds. On their own, these two items can provide valuable information. WIPS is time or cost not yet billed, so effort or money expended with no attempt to collect just yet. How long have these items been pending? Is that balance getting kind of high? Client funds keep you aware of the money on hand which can potentially be earned. So why is comparing these two important? Someone on your team should be trying to proactively avoid collection issues. One surefire way to do that is to maintain evergreen retainers. If your WIPs are $5,000, but there's only $2,000 in trust, you may choose to pump the brakes on that billable activity until the retainer is replenished. Once that accountability is established, this metric can point out how well that process is being followed. Speaking of collections, you also want to be mindful of the aging of accounts receivable, also known as AR. A lot of your staff's time likely goes to preparing and handling bills, but often not enough focus is on getting paid. The collection process is often seen as tedious, but the firm does not earn a return on that time spent until those amounts are actually realized, as we discussed earlier. This metric will highlight not just how much is outstanding, but for how long. 1 to 30 days past due might be quite common, but for those past that, what's being done? Are you continuing to put valuable resources towards these files even though the firm is not getting paid? I also suggest tracking write-offs. Some firms rely heavily on waiving or discounting balances to reduce their AR, but that should only be done as the last step taken. Before you do any of that, you want to look to leverage some automation tools in your billing software to easily inform your clients of late payments. This would be a very productive use of your administrative time. Some firms who run into collection issues take the route of shifting the accountability of collections to the responsible lawyers themselves, and therefore linking it to bonus and salary amounts. That can lead to a more proactive approach to reducing past due balances. This brings us to proportion of administrative or non-billable time. I just mentioned how much of your staff's time is likely spent on billing, but also reception, data entry, operational tasks. These are all non-billable activities. Do you know how much time is being spent on these routine tasks? Often when we think of tracking time, we focus on client-specific activities, but a good amount of time is spent on running the business itself. That, however, has to be proportional to the return. Perhaps more tools can be implemented to automate repetitive tasks so those resources can contribute more to billable hours. Some firms require their administrative staff to track their time each day, even if not client-specific or billable. You can also leverage task management tools or timers to document how long a particular task may take. Next is business development effort and cost analysis. This pertains to the marketing side of the business. What is being done to bring in more business, and what is the return on those activities? We spoke earlier about tracking the number of new matters, but are you tracking which clients come from which sources? Perhaps they saw an ad, or they found you on Google, or maybe they met you personally at an event. Those producing the highest conversion may warrant more of your resources. Those who are not, you may want to redirect those resources. If business development is a responsibility of certain staff members or partners, you can measure their contribution by tagging the origination as well, which can then be reported on. You also want to consider your referred business. If another lawyer who focuses on a different practice area, maybe they send some clients your way. You want to tag that origination and continue to foster that relationship. And lastly, we're going to cover profits. You want to track profitability by segments. Revenue refers to just money collected. Profit takes all of the costs into account as well. Your profit and loss reporting breaks this down for the entire firm with the goal of a positive net income. But you may have more specific questions related to your profit. How profitable is a particular lawyer, practice area, office location? Many accounting tools allow you to create segments or classes. You can then assign matter transactions and firm transactions to some of these different segments. For example, I am paying for an ad in a family law publication. This would be an advertising expense, but I have a general practice, so I want this cost to be reflected specifically towards my family law cases. This can also help to determine the return on that investment. At the end of the day, you know your team and business best. Once accountability is made clear and benchmarks are set, you can utilize all of these metrics to see the true productivity of your team and keep everyone on track. I hope this session was helpful in highlighting how metrics can be leveraged to track and increase productivity among your team, no matter where they may be. If you would like to learn more about how you can implement practice management strategies and technology to increase your firm's productivity, register for our upcoming live webinar.